Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're talking meme coins and specifically we're going to take a look at some technical analysis on PEPE. Is it all over or is there still some gains to be had when it comes to PEPE? And yeah, the potential of this thing does seem to be pretty insane. So we're going to jump down into that. We'll take a look at what's going on there, but maybe there's others. Maybe there are other meme coins that you might be interested in. Now, for full clarity, full disclosure, I do not own PEPE. I do not own meme coins. It's not really my thing. But, you know, actually a fellow influencer reached out to me and said, it'd be great to do some TA on PEPE. The community, his community would love it. So I thought, well, why not? People want to see it. Let's go into it. Take a look at what's going on with PEPE. As I get into the video, if you find it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, why not subscribe? Tap the bell, select all the notifications, and in doing so, you won't miss another video update. And if you haven't yet joined us in Discord, guys, what are you waiting for? Check it out, linked in the description below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Okay, first things first, we don't like this on Binance. There's not enough data there. I think 𝗕𝗘𝗪 has more data. There we go. That's what we want to see. Right, we're going to change these over. We'll change into 𝗕𝗘𝗪 and we'll take a look at more data. Okay, cool. So I've done no analysis on PEPE here, so it's a blank canvas to kind of start. So what we want to do is we want to ascertain whether or not we've got more upward potential or whether or not it's done and dusted and we can move on to another meme coin, right? If that's what you want to do. I don't own it. I don't really care whether it goes up or down. So you'll get an unbiased view here. So let's go ahead and check this out, right? So let's take a look at this initial structure. Initial structure is very important to us. It is 5 waves. I can see this right off the bat, and very interesting structures here, in fact. Shame I don't have a little bit more clarity on what happened beforehand, but this is an interesting move. But I'm going to kind of park this little area just here. I'm not going to use that because I don't know what led into it, and it is interesting to see this move down and then this move upwards. So really what I'm going to do is I'm going to look at this low down here as our starting point because it is very interesting to me. And the reason for this is I can see right off the bat, just without even really paying too much attention, we can see there's a little 5-wave structure in there, which is cool. Then we see this move up here, we'll pull back down, and again, this looks pretty good because we didn't come down lower than this point. And so I'm going to just use some horizontal lines here. We're just going to take in a couple of points. We have this low and we have this low over here. Okay, these are basically higher lows, if you will. And then, of course, we have this low over here. And again, it's another higher low. Now, these are important because we're not breaking our structure to the structure upwards. We're continuing this move to the upside, which we know because obviously we can see that we had a fantastic run. But this is the beginning, and it's important that we understand what's going on here. So what's going on? Well, we can see that we had that 5-wave structure, but I'm going to park that for a moment. I'm going to grab a Fibonacci retracement, and I'm going to take this first level here, and I'm going to move this over to our second low just over this side. I won't be super accurate about it because we already know that we hit the 1.618, but it was just there so that people know that we are already in that impulsive structure. So ultimately we have a wave 1, a wave 2, a big wave 3 here coming down into a wave 4. Again, we have another really interesting structure over here where it looks like an overextension in our 5th. Okay, and we know that that is a complete structure at that point, and because we start to correct on down at this point over here. Okay, so we know that we have a really good, interesting structure here, and I would say that this is probably the wave 4, and then we finish off with that final 5th wave movement there. So everything's nested down reasonably well and pretty decent, actually, pretty decent corrections. So looking at it, I'd say we had a wave 1, wave 2, wave 3, wave 4, wave 5 within the 5th wave. Over this side here, we've got a couple of different ways of looking at it. We have an interesting structure at the beginning, but we can see the 5, that's your 4, so that's your top of your 3. I would say that it's actually probably there. Looking at the wicks on here, they're a little bit crazy at the beginning. I'm going to say that we probably have it around about here. It's a little bit fiddly, but we can kind of see it right within there. And then, of course, we have our structure down here, which for the most part is quite an easy one to spot. That makes a 5-3-5-3-5. Now, that beginning structure is interesting to me over there, and I can't really use it because I don't know what led into it. But it could be that there's a little bit more to the upside to be had. And if we go into this, we want to first of all figure out where we're retracing. So we're going to have to take our entire 5-wave structure here. So I'm going to take this low down here to the high up here. And we can see that we've retraced almost to 50%. We're not there yet. Okay, so we've kind of come down deeper than the 38.2, which is okay. 50% would be kind of where we'd hope that we'd find good levels of support as well. We can see that also within where our fourth wave and second waves kind of retrace down into. So we know that there's going to be an area of support to be found within that range. For clarity, guys, that is 0.00008738.384. It's a lot of zeros. So I'm just going to forget the zeros and just say 87348. Gotta love those memes. So we'll throw that in down there. This is not going to be super accurate because it's going to require me to kind of move this up to 384, and I'll get there eventually. There we go. Perfect. So that's our dashed line. I can remove the fibs. So that's our kind of area that we're looking at as thinking as a potential retracement to the downside. But we have completed that 5-wave move to the up. Okay, cool. So let's go ahead and take a look at our structure to the downside. Is this over? Are we expecting a little bit more to the downside? What's going on here? So we can see that we have an overlapping structure coming down. We pushed up, we come back down. This one's actually impulsive, which is okay. That could be leading, but we don't have a requirement to think of this as anything more than a zigzag pattern. Let me show you why. So over here, we can see that we have our 3-wave structure coming in pretty much exactly as you would expect, 1-to-1. Nothing much more than that. So I'll mark it up as a zigzag pattern with a leading. Then over this side here, we can see that we come up in a pretty corrective structure, double top scenario right up here. Let me throw that in there. You can see this high came in at 203189. This one here comes in at 198310, so slightly lower. But interestingly enough, there could be something more to that. Actually, I would say 1, 2, potentially 3, 4, maybe coming down. So one of the things I'd say is we might end up with a double zigzag taking us down towards that lower area. But it's not impulsive. It's not trending down from an Elliott wave theory point of view anyway, which is nice to see. So we do have this one here. Let's see what's going on within this area up there, and then we have a pretty interesting kind of structure kicking us down here. That's looking okay. Probably an overextension within this area somewhere. 1, 2, 3, 4, 5, sort of. It's a little bit messy towards the end there. But ultimately, not terribly too concerned. That's all looking okay. So let's go ahead and throw in our fibs on here. What's this looking like? And this is probably where we get a little bit more bearish about things. Not necessarily the best place to kind of be. I'm actually looking for 2853, 2853. Let's see if I can get that to 2853. There we go. Okay, so the fib actually gives us a little bit more of a bearish situation, coming down just a fraction more to the downside. So you can see here, this would basically be 56652 to 72943. So slightly lower than our original kind of 50% Fibonacci retracement area, but still well within its structure. One of the things that we don't want to see if we want to be bullish on the market is anything deeper than this 44520. Okay, so 0.0000044. 520. That area there would basically break any idea of a move to the upside under a impulsive structure. But until that happens, even retracement down here could be just a deep wave 4 positioning. And we can see here that we're not necessarily doing anything more than this. Our minimum expectations have already been met. So although I'm saying there's further downside, the minimum expectations on that downside have already been met. We can reverse up at any point here if there is a lot of momentum or a lot of demand behind it, which is unlikely at this point in time. But that being said, there's no technical requirements to continue moving down from an Elliott wave theory point of view. And we are potentially still looking as a 1, 2, 3, 4 kind of 5 structure, and we have more upside potentially. So a dollar cost averaging opportunity into PEPE, possibly, if we really want to see this thing fly. But of course, you know, that's just an Elliott wave theory point of view. When we come on over into our smart money concepts, we can see that we have gone from a bullish structure that we were in previously over into a bearish structure now. So from a meme coin point of view, we have a strong high unlikely to get broken and a weak low likely to get broken, so further downside. There's one fair value gap here just on equilibrium, so I do expect us to push back up towards that at some point. So, you know, it'd be interesting to see how that plays out. Sometimes we do actually get false flags on these change of characters. So until we get confirmation, we can't be overly too bearish on the situation at the moment. So yeah, keep a close eye on it. Ultimately, we are oversold on a lot of these timeframes as well from a momentum point of view. So lots of selling pressure has occurred. We've dropped down quite significantly. If I actually go ahead and measure that, we can see the distance that we've fallen ultimately is about 76.51%. So it's come down quite heavily, but there's still room to the upside here, in my opinion. And we've had a pretty healthy correction to the downside. Lots of profit has been taken off the table. And unfortunately, some retail investors are probably still holding this one. That being said, I still see room to the upside until proven otherwise. Even though we have this bearish structure here, we usually do retrace upwards across this area anyway. So any trap positions can obviously come out of those if they need to at a later date. Ultimately, I'm not confident on the crypto market overall, so there might be a little bit of an impact on this meme coin based on the wider crypto market. But, you know, this is why I don't understand meme coins. It's not really driven from the same kind of fundamental aspects that you see with other projects. So I guess if the community want to rally behind it, it will probably do quite well and it will continue to kind of run. That being said, though, maybe you're tired of PEPE. Maybe you're looking for new altcoins. And two other altcoins or two other meme coins that have crossed my path recently. One is 𝗕𝗘𝗪𝗔𝗥𝗘. That one's come up recently. Don't know anything about it. I think it's on the Ethereum chain. So that one's got like, I think it's just launched 2 days worth of data here on CoinMarketCap. So super early on that. And the other one that's cropped up quite a lot in the news at the moment is SpongeBob. And this one, I think, has about $12 million market cap. So in contrast to PEPE, which I think did hit that $1 billion market cap. Yeah, it's currently at 476 million. So in contrast to that, we have SpongeBob at 12 million and Love Snoopy. I love Snoopy. I don't have a market cap for it, but total liquidity is about 4 million. So I imagine super early on both of those. Maybe those are alternatives to PEPE. Maybe people are rolling out of PEPE into new meme coins. Let me know what your thoughts are in the comments below. What meme coins are you interested in? And do you see a fifth wave movement to the upside? And do you still think there's a new all-time high here for PEPE in the future? Let me know your thoughts in the comments down below. I'm going to wrap this video up right there. If you found it useful and informative, smash the like button. I do appreciate that. If you're new to the channel, why not subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Don't forget to join us down in Discord, and until the next one, have a fantastic day. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to risk your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.